Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube stations. I get in and out of these in about 3 to 4 minutes. I've worked thousands of IRS cases, literally thousands. I worked for IRS for 10 years. I was a teaching instructor for IRS. I worked the Offer and Compromise program. I've worked cases just like yours. So you want to listen to what I have to say. I was the IRS. So anyway, if you can't pay your IRS tax debt, what should you do? When I was working at IRS, only over 40% of my inventory I had there, I had to close cases because people could not pay their tax debt. Usually when all the bills come out, a lot of people don't pay. Why? They don't have the money. So what happens and what do you do when you can't pay your IRS tax debt? Well, the two things that are very important is continue to file all your returns. You must do that. Because if you do and IRS sees you're trying, that's thumbs up for you. They want to make sure that you stop the problem. So if you're self-employed, they want to make sure you're making estimate payments, or if you're W-2, they want to make sure that you're up to date on withholding. So you've stopped the problem. Now, what is the very next step? So as a revenue officer, if I was working your case, or if the service center and you can't pay your tax debt, when you call them, IRS is going to say, okay, you can't pay. We want a financial statement on you for you. So what has to happen is you're going to have to submit a financial statement to IRS. If the case is at the service center, the 1-800 number, you're going to fill out a form 433F. You can download it. It's a 2-page form and at least be familiar with the questions. If the case is with a local revenue officer, a 433A is necessary. It's a lot longer form, and the IRS agent is going to go through it like big time. So what IRS does is they have a program. They don't advertise it. It's kind of a hardship program. When you work at IRS, you call it, well, we're going to 53 them. That's the form you use to put a person in currently non-collectible. So the term when you can't pay your IRS tax debt is called currently non-collectible. And the key word there is currently, because that means you can't pay your debt at the given time, which means what is IRS going to do? Well, a couple years later from now, they're going to relook at the debt. IRS has algorithms that say, well, if you're making more money, they may trigger the case to come on based on the fact if you make $20,000 more, they'll bring the case back out at that point in time. So how do you get there? Well, IRS wants to look at the financial statement. The page they really look at is the page that has your income and your expenses. Why is that absolutely so critical? Here's the problem that you have to remember. IRS has the expenses that they are going to substitute for yours, and you may not be currently not collectible. See, IRS uses the Department of Labor form, the statistics, and when you want to know what they are, you should look them up. Just Google IRS national standards. They have them for food and clothing, housing and utilities, car payments, and car expenses. So be prepared for IRS to use their expenses for yours, and then IRS runs the formula. You give them their expenses, and they will let you know whether you're currently non-collectible or you're going to get a payment agreement. Be careful when you pay IRS, because if they knock your expenses out, you're going to wind up with a payment agreement you don't want. So you got to be really careful. If you need my help, give me a call. We work larger cases. But remember, if you can't pay your tax debt, IRS has a program just for you, just so you know. Give me a subscription if you would. Thank you so much.